Monday, September 26th, 9:42 California time in the morning, about halfway through the day. This is Market Analysis Stan Ehrlich. We always start out with the S&P 500, the spider. We are sinking again. The market is currently down about 3¾ points, very close to Friday's low, which was the lowest low for a couple of months, a few months, and almost a new low for the complete bear market this year. So we have a little support. That would be the lows that were made on June 17th of this year, which was the very bottom of the market at 362.17. Call it 362. We're right now at 364.12, 2 points away. We're also very close to Friday's low, which was 363.29, so a little less than a point. And that is the last significant support level we've got for a very long period of time. If those support levels are broken and the market stays on a closing basis below those lows, we could see another sharp sell-off, maybe in the low 50s. So another 10, 12, 13, 14 points. Maybe. That's exactly what I would predict, I guess, if we are going to close below all previous lows Friday and the one in June. But we would gap down on Friday. Gaps are almost always closed. And that goes for the DIA, the QQQ, and the Russell 2000, as well as the Spider. All four of them gap down on Friday. So I think we're about to turn around and start to rally. Frankly, very close to where we are right now, time and price-wise. Just so you don't get too excited about my idea, past performance is not indicative of future results, and hypothetical returns has some inherent limitations. The usual disclaimer. I'd like to be right all the time. I'm not. So I'm watching very, very closely to see if I can get a hold on any bullish technicals that are starting to develop today, in the next few hours, in fact. Not yet, though. I see the possibilities, but it's not happening. So sit back and wait and see what develops. Let's look at the 1 minute chart on the spider. You can see this morning we opened, we had a rally. It came close to closing some of the gap, but not quite close to Friday's high. There's still a gap there between Thursday's low and Friday's high. It turned around and it slid all the way back down and started to make new lows for today and come close to Friday's lowest low, and that's where we are right now. The DIA, interestingly, no, it was the QQQ, sorry, did close the gap from Thursday's low to Friday's high. So now on the Qs, there's no gap to close, and it, of course, is sinking some, but holding up a little bit better, relatively speaking. The DIA is very close to Friday's low. The S&P is very close to Friday's low, and the 2000 has actually made a lower low than Friday's low. On the daily chart, the 2000 is extremely close to making a new low for the year. Just a very small amount away. So this is exactly the spot where the indexes could, I hope, turn around and start a rally. Now, let's talk about that October low, which I keep mentioning for the last few weeks. The month of October historically has a, just a second, I will move my chart over all the way to the, I didn't want to do that. I think I goofed things up for a second. All the way over to, and I don't know. Yeah. No, it's still not there. I apologize. Here we go. And That's exactly what I want. We're in the last week of September. October 1st is Saturday, this coming Saturday. The green vertical bars under the price action represent the time frame for October. This is a weekly chart. You can see a year ago we were slightly early, about on time, and I think I messed up my rhythms. But the historical statistics for this particular seasonal tendency is very, very strong. The high 80 percentile, very low 90 percentile for the last 30 plus years, we have had some significant buying opportunity in October. Usually the bottom of a decline. A lot of people know that September is a, we shall say, bad month for most people, investor types, long-term traders. And yes, you're going to lose some equity if you don't do something about it in September, August and September. It sometimes starts in August coming down, but September's the month people tend to remember. I like to say, if you're flexible and a trader, you're short starting maybe in August and during September, which I have been. But I'm starting to get friendly. I'm starting to get bullish. I'm starting to look for buy signals, and I want to be a buyer. I think it's just a little early. In fact, we're not quite in October yet. Not that that's cast in stone, but it's darn near it. So I don't want to go down too much. I don't want to go down too fast. And I want this oversold condition that we are currently in on daily data charts. This is a weekly, so we're not oversold on the weekly. We were back in May, and we were at the beginning of this bear market when it first started to break down really fast. Back in January, the end of January. So most of the proper conditions are there. Downside exhaustion gap Friday, oversold conditions at historical support levels. We just haven't started to rally and sustain a rally. We need to close the gap first. We need to stay above the gap closure. We need to gain some more ground. That may take a day or two or three. If all of that falls into place, I will scream bloody murder that the October lows have happened, maybe a day or two late, but I'll try to do it quicker, more accurately, timing-wise. I just can't say it quite yet, but I think we're very, very close. Let us, and I keep doing that, don't I? Okay. Forex, the euro dollar. Wow. This is the lowest low for 20 years. The euro is now trading at a discount to the US dollar for several days, a week or two actually. We're down to 0.96 cents to the US dollar. That means you get a 4% approximate discount when you buy stuff in Europe relative to the price in the US. I'd like to say I bought my tickets to Paris again, but not yet. There is a chance. This chart shows me that we may get all the way down to maybe 90 cents to the US dollar. It'll take a few months, maybe 6, don't know exactly, but some significant amount of time still. These things don't usually happen super fast. And this is also a weekly chart. And we are oversold for the last couple of weeks. So I like what I'm looking at. We deserve a bounce. The bounce could be up to 104, 105, and then back down into the 90s again, and continuing to go toward 90, let's say October, November, December, maybe a little longer. But this does not look like a long-term bottom at this particular point. I am still bearish on the euro and expecting lower levels. Okay, futures contracts. I got some stuff for you today. In particular, and I'm going to save the best for the last, and that's OJ. But let's take a look here at natural gas, the energy markets, and I will make that comparison to OJ in just a moment, so I'm not going to save it for last. I'll make it the first. Let's look at this natural gas chart. We got up to very high levels back in June, topped out, had a big break. From 9.5 down to 5.5 or so, but it came all the way back up to just a few weeks ago, and developed a head and shoulder top formation. Your neckline would be from the lowest low after the first shoulder, below the low after the head of the formation, and we broke the neckline a few days ago. A little bit fishy right there. It's not supposed to go back up above the neckline. It did, but it stayed on a closing basis below the neckline, kind of important, and started to drop off on Thursday sharply, Friday some more, today some more. A little oversold momentarily. After the downside breakout, you do expect some sort of a bounce and then down again. So this head and shoulder top, just eyeballing it real quick, looks like it should have a downside objective in the ballpark of, say, 6.00 or maybe a little lower, and that is the minimum downside objective. Why do I like this natural gas chart in comparison to OJ? I can make a little joke here. Sometimes their digestive systems doesn't work very well with acidic, pineapple juice or orange juice, whatever, and it does give them natural gas. So this chart looks, watch this, trading range, April, May, June going up, broke down. Now I'm going to make the comparison, this is really weird, with OJ. Trading range, April, May, June, go figure, I don't know why, came back down. The next thing you know, OJ, like heating oil, or natural gas I meant, came up and has made another head and shoulder top. Would you believe that? Here's the neckline. This has not broken out to the downside yet. On the natural gas chart, we had a bearish breakout already. Broke the neckline a week ago. And we have a bearish Ehrlich reversal at the very top of the market. Perfect. Exactly why I have built the automated trading system, the ER signals. This is a classic example of what I developed it for. And we were potentially short on the high day or very shortly thereafter, and still short natural gas. Downside objective again, something in the ballpark of challenging the lows of June, July. Back to OJ. Really weird. Here, the head and shoulder top does not have a bearish engulfing on the highest high, unfortunately, but the first shoulder high has a bearish engulfing ER signal, and today is a new sell signal in orange juice, a bearish engulfing overbought conditions, bearish engulfing, ER sell signal combination. I do use customized versions of the bearish engulfing signal, not exactly the candlestick that you learned from, say, Steve Nissen, who wrote one of the original books on candlesticks. And the relative strength index at the bottom, and that's what this is. It's not a chart, a bar chart. It is simply a representation of RSI in a much different way on the subgraph. It is, or was, and is today, overbought. Therefore, the combination, you've got your bearish engulfing. I love it. Shoulder high, but not the head. OJ. Natural gas, weird. No signal on the shoulder high or the shoulder high, but the head of the formation did have a bearish engulfing. And other similarities. Okay, heating oil. Bullish engulfing a few days ago. We have not yet, I don't think, broken that low, which was 3.1304. Today's low is 3.11, so a little tiny bit below 313. So we did break it. Yeah, we did break it by a small amount, but we're still at support. So it hasn't broken down completely. I think this is still trying to bottom out until we make a close below these two important lows, August 9th and the one last week, September 19th. There's support there and a little evidence of earlier as well. So I wouldn't go short yet. You have a downside breakout coming up, maybe. We're at support that hasn't quite been broken yet. and one buy signal a few days ago that was, at this particular point, very iffy. So this is a turning point. Either it's a breakout to the downside and another substantial decline coming, or it's going to bounce back up to, say, 4.0, that previous rally high a month ago. We did get a bearish engulfing with the ER signal on the very top of the market there. Great on June 17. Again, that's what the signal technique strategy is built for. We also got a great one back here on March 9th of this year. Next, crude oil. Again, if these heating oil, crude oil, natural gas, energy futures go down, that would support a rally in the stock market. You would think, maybe, hopefully. That's what I'm expecting. We do have in crude oil, the most important, a downside breakout Friday. It is continuing to drop down some more. The stock market doesn't seem to care yet, meaning it's down 2.5 points, two and a small amount at the moment, which is a little tiny bounce of about a point while I'm talking. This looks bearish. This looks like it could continue to drop down, I would say at a very bare minimum, to 71, right now 77, and very possibly down to around 50, 49. It's going to take a while, a month or two. Bear markets fall faster than bull markets go up, so maybe a month, but it's not going to happen overnight. Next, if I'm right in the first place, platinum. Well, I got a sell signal last week, and boy, did it turn out to be a good one. We have a sell signal on September 21st, a red daily vertical bar. The same thing can be plotted on candlesticks. It doesn't matter. It's the same data. It's just showing you the prices in a different view, a different look. Same information. We also got an excellent sell signal on August 15th and a whopper on March 9th of this year. So far, two fantastic ones. And then last year, come on. My cursor's stuck for a moment. Whatever this is, in November of last year. There we go. November 16th of 21. And a good buy signal on top of that on September 7th. But now, a sell signal 4 days ago. It's coming down dramatically. It got off to a great start. We're actually getting relatively close to oversold, but not quite yet. I'm still bearish on platinum. Let's see how much more to the downside I can get out of it. Bonds, interest rate futures, higher rates look to be in order. This is going down, meaning rates are going up. We know they've raised the rate 3 times now, 0.75%, unprecedented this year. It doesn't look like it's stopping. It is oversold. It should, but I don't see any technical reason to proclaim that the darn thing's turning back up. It just isn't. New low, low and last, below previous lows, new low for the trend, except for being oversold, which implies that it could turn up at any time. It's not yet. You want to get ready for a buy signal, but it's not there yet. If you're short, stay short, but get ready to take a profit. So it could and may go down more. That's it. Stan Ehrlich, thanks for viewing. Have a great trading day. Mañana.